Okay, trying this one more time. One more time for the people. All right, everybody see my screen? Just give me a yes or no in the chat. I'm in the server. We've opened up a free section, and I believe you guys can see my screen. And this is going to be pre-recorded and re-uploaded to the YouTube land. All right, so this week, non-farm payroll Friday. Happy non-farm payroll week to all who celebrate, myself included. But it is a big week on the horizon. And, I was yapping on YouTube for a solid 15 minutes before I realized that my restream did not, in fact, upload. So anyways, all that aside, coming into this week, what we really have is kind of like a lot of nonsense, quite frankly. As we prepare and as we come into the fourth quarter of the year, a lot of it is the preparation for what I call like the big show. And so the big show really is this Q4 ramp, and it's going to start off on Friday. And so the headline of the thumbnail for this week is non-farm payroll Friday. And between now and Friday, yes, there's a handful of events. We do get EV deliveries across the board or vehicle deliveries across the board. I believe that's on Wednesday. We have some AI events. We have Google has an event. We have Amazon has a hardware release. China celebrating the 75th anniversary of the People's Republic of China this week as well. So there's a couple trades that are possible around these things. All of this is to say that, hey, look, there's a lot of noise that's happening in the market right now. If as a trader, not an investor, but as a trader, what I would say is it's best to stay event driven in the near term. And when I say near term, I mean the next couple weeks. And he says he can't see anything. You're going to have to refresh because I think you can see. I think it's a him thing, but again, I'll be uploading. I can definitely see. In the next couple weeks, everything is really just a lead up into non-farm payrolls, and so I'm going to go ahead and move forward. Yeah, that's what you're supposed to see. The poster. Here's the recap. Did you see the screen change? Is working. Ava can see it. Cool. All right. So the recap. So again, every week what we do, kind of look at what happened last week, what's happening this week, and how it can shape your possible trades moving forward, both from a positioning perspective, short, near, and long term. There are a couple things that happened last week, the biggest of which obviously is the FOMC meeting. And yeah, definitely view from the desktop if you're looking in Discord. The biggest thing, I've been talking about this home builder trade, and last week we talked about how, the home builders kind of pulled back a little, and it was a bit exaggerated, not exaggerated, but here's the takeaway from FOMC meeting for me, and I think the broader market as a whole, right? So a couple things to take away from the speech last week. Number one, Powell reiterates that there's no risk-free path for the Fed among the quote-unquote dual threats. And so if you go back to last week's recording, last week's broadcast, it was, hey, look, my sentiment was that, yes, well, the market is focused on the labor camp, the labor situation, there is still kind of this underlying threat that, inflation might be a little stickier than maybe the market thinks, and that, in fact, maybe inflation could be still a threat. And that's actually exactly what Powell ended up saying, unfortunately. And so because of that, we're hitting a bit of a small ceiling here. And the second piece that came right after that was that he says October rate cuts are not guaranteed. And this was kind of like a bit of a 1-2 punch for the home builders and the, I'm going to call it regional bank trade. So these two pieces that I personally am very interested in looking at for the next, let's say, 1 to 2 years, at least, from that type of positional trading. I actually am looking at these as a gift, right? Possible dip buys and more interested dip buys because, one, I don't believe that the market's going to say, all right, well, okay, maybe a rate cut in October is not guaranteed, but at a certain point, the market's probably going to say, well, it's still coming. And even if it's not coming, the idea behind this home builder and regional bank trade thesis is that the rate of rate cuts, the velocity of rate cuts moving forward is going to increase. And that's not going to change with a single FOMC meeting. It's the net velocity, like the net rate of the total cuts are going to be coming down faster. The rates are going to be coming down faster than they were coming down before. And I think regardless of 1 month or two, that's still going to hold true. Albeit maybe October is not guaranteed. That's fine. It's still the trajectory of the cuts is steeper than they were before. And then on top of that, last week we get a surprise in another data point, which was surprise. New home sales in August surged the fastest pace since early 2022, which for me is like that's really cool. Kind of solidifies that trade thesis. I mean, it's a thesis that in fact, maybe the home builders might be the best value play in the market right now, and the regional banks right behind them. So I think this is the biggest market area to watch still for the next 1 to 2 years in terms of where the value is not like, this is not like, oh my God, I got to go out and buy them right now. There's a lot of patience to be had here. But in terms of positioning personally, I think there's a lot of value to be had for many years to come. And a lot of areas in this space, let's say regional banks and housing, that could have a lot of upside to go. The reason it's regionals is because if the housing market does actually start to turn around, well, who does a lot of those home loans? It's actually regional banks that do a lot of those home loans. So if the housing market specific to those regions where those regional banks are turns around, well, then that's a big tailwind for that specific region of whatever regional bank that you're looking at. Let's say specifically in New York real estate, right? New York real estate has been in a rut for a while. If that area starts to turn around, well, shoot, those New York regional banks are going to be that's a big value, right? So little things like that, I think, are still, there's still a lot of value to be had, and I think something that you can really look at in terms of a positional perspective from a positional trading. That means much longer term view, not months, not weeks, but like maybe years. In the meantime, we get the final look GDP, which ends up being the fastest rate that the economy has grown in the last 2 years. So what does that mean? So yes, labor coming down, weak labor reports, all these insane revisions. We know this, but GDP ends up, final GDP numbers coming in pretty good. Actually, the fastest rate of growth we've seen in the last 2 years. So maybe the labor market's, bad, but probably because AI is driving a lot of efficiency. And again, maybe the market's just finally coming around to this idea that maybe it's not all that bad at the end of the day. And then Powell caps us off with a throwback to 1987 Fed president. I don't remember if it's Volcker or what, but for the oldies out there, there was once a Fed president who said the market was in like irrational exuberance. Don't quote me on this, but I think it was like an irrational exuberance quote. It wasn't that bad, but Powell did say that equities are fairly highly valued and stocks began to sell off. And so, I don't know if he's trying to do, a Volk or whatever, but, he's not an analyst, but they listened to him, and that's what happened. That said, we got some data points that came in pretty good. Market began to buy the dip pretty quickly. It's been a very funky seasonality situation. And for me, I think this is all about positioning and posturing for the big show, which doesn't happen until mid to late October. So for me, I think this is all about getting your shopping list ready. Do we need to jump out and immediately buy? No, there's no real headline that's going to get me super excited about buying a breakout or anything like that, other than, let's say, hood, which we can talk about today. Situations where maybe the market is just absolutely blind to something that's just insane. But I think even after today's move, maybe that's coming to fruition already. But net, here's what we have on deck for this week. So this week, we do have some more home sales data that did come out. We'll take a look at that in a little bit. After last week, we got the Fed was on a blackout period, and now they can start talking again. And guess what? They're on a run. And today we get 5 Fed speeches. Tomorrow we have 3 more Fed speeches, and they're just, they can talk, so they're going to talk their heads off. And here we go. And then tomorrow we get jolts, and then Wednesday we actually get a little bit more data, and then we get ADP. So if you're not familiar with ADP, this week is going to be all about non-farm payrolls. But ADP is like a private sector version of non-farm payrolls. ADP has been wildly I don't want to say inaccurate, but very different than the government version. But it has started to move markets a little bit. So people are paying attention to this Wednesday ADP number. Now, Thursday, we get this jobless claims. So there's a JOLTS number that comes out on Tuesday, which is job openings. That's how many new jobs are being opened, not how many jobs are being taken. Non-farm payrolls is actually how many new jobs have been taken. JOLTS is how many new jobs are being listed out in the market, not filled. That's Friday. That's the filled number. And then Thursday is the jobless claims number. That's how many people are filing for unemployment insurance. So three different things there. The one that's most important is this non-farm payrolls. That's how many new jobs were actually filled. And we're really not looking for a big number. I'm going to go into the actual calendar here. And when we go into this Friday, and I think we look at this for Friday, I'll pull this up as a quick data point. Yeah, we're looking for, we're used to looking in the 200 plus thousand number, 260, 240. We got a low end number, 44,000, 260, 323,000, 100,000, 100,000, 100,000, 150,000, 19,000 May, negative 13,000 June, 79,000 July, 22,000 August. Consensus is coming in at 50,000. So the market's not looking for a big number. I'm not used to these really pint-sized numbers, quite frankly. I don't think, I don't even know the last time. Let me just go back here. Yeah, the last time, geez, I don't even know. No, these have always been in the 150 to 200,000 mark. It's not normal to see numbers like this in the 50s. And again, I don't know if it's just AI driving efficiency or what, or we're just resetting expectations as an economy. But here we are, 50,000 forecast number, consensus number. That's what's priced into the market today. So if we come in higher than that at the actual, it's going to look good for the economy. If we come in lower, I think it's going to be a little digestion phase. What I will say is that whatever this number is, it's going to tilt the market significantly. And so it's all about this Friday. If it's a sell-off, cool. If it's a ripper, that's a whole different deal. I think if it's a ripper, you kind of like chill and let it settle down. But if it's sell-off, I think that's more, maybe I get excited, right? Because what will happen from here is that all of your retailers, everybody like that, will start preparing for the holiday season. And this is what I mean by the big show, right? From here, whatever this is, this should be the lowest. It should be the lowest non-farm payroll reading that we're going to get for a while, because November is going to come in and we're going to get all of the seasonal employees start to come in. And the November non-farm payroll read should include a lot of seasonal hiring. And so moving forward, this October NFP read, if we get a sell-off, this is the baseline for that, for the big show, right? And that is the ramp into, and I'll just say this, it's super early. I think this is the earliest that I've ever said this. It's not even October yet. It's still September. It's September 29th. It's the ramp into the Santa Claus rally. And it's not even October, and I'm saying the Santa Claus rally. But that's the big show. And it begins with the holiday seasonal hiring, which actually starts in mid-October. And so this non-farm payroll job number is not going to include that. But the next one, we'll start to see that ramp. And so from here to there is where that positioning begins. If you're thinking about doing it now, you're a little early. So I think that's my point. This is where you want to maybe have the shopping list ready. If you get the dip, it's the dip before the rip. And it's usually a good one. So that said, I think everything else was pretty kind of not going to make a huge difference. Again, hear the speech. 1, 2, 3, 4. We did get look at this, pending home sales, 4% actual on a consensus of pending. So of 3%, 0.3%. Look, that's a big number. Pending home sales year over year, this is a big number. This is good for that housing thesis. It's not a short-term thesis. Housing price index prices are going to stay the same. Prices coming down. That's good for that thesis again. Chicago PMI, PMI number is not really doing it. Consumer confidence 97. Quits, more quits. You're not seeing mortgage refinance. 30-year rate coming down. Look at that, 30-year mortgage rate coming down. Also good. And the ADP employment forecast also coming in at 50K. Construction spending, one that we will want to watch as well. So construction spending month over month, this is going to be important. So under the radar number, this is a Wednesday number, negative 0.01. Again, these are little under the radar numbers that are going to be important for a longer term view if you're into this kind of thing. Your balance sheet. This is it. So non-farm payrolls. This is going to be this is the big show for the month. And I think whatever you see between now and then, again, it's going to be mostly noise. Everything will change on Friday. And my message would be that between now and then, it's probably best to be event driven from a trade perspective. When I say trade perspective, I mean 1 to 2 weeks or a couple days, if that. So to that end, I'm just going to pull up our buddy Evan's feed right here. Yeah, if you guys are in Discord, then you have to turn off your other feeds. If you have other things playing on your computers, you're gonna have to turn them down. But so here's Evan's post. I'll just drop it. Actually, in the disc. Well, actually, I'll just roll through it. So Monday, Catalyst. So BitMine, we actually went through this. If you're watching any of our stuff, look, that was I think a pretty good buy last week around 48. Just we was always as close to 50 as you can post that last raise. Turns out, I believe, a pretty good one. Most overbought. This is that's just a note here. FedEx, nothing crazy. Earnings, Nike on Tuesday. So Nike reports tomorrow. This is a big one. And then tomorrow, Amazon has a hardware reveal event. I don't know what they're going to reveal, but tomorrow, that's Tuesday, Amazon hardware showcases to expected to be a new wave of Echo smart speakers, Fire TV devices, and Kindle e-readers, all designed to leverage the upgraded Alexa Plus AI assistant. So new generation of Alexa, kind of cool, but Amazon's had a nice little dippy dip. Maybe she can be back on the rippy rip. We'll see. And then Wednesday. So Wednesday, this is the EV release. Key data reports. First few days of the week include updates from deliveries from Tesla, NIO, XPeng, Rivian, Li Auto, Polestar, Lucid, and then quarterly sales reports from GM, Ford, and Toyota. So all of these key car makers will all release, not on the same day, I don't think, but Tesla's the biggest one. Tesla's been having a big ramp, I think they're up 30-something% in the last month. But yeah, the delivery number, Tesla hit like $450 this morning. And I haven't really looked at the charts, but they pulled back a little bit this morning. But I mean, this has just been such a huge run. Whatever happens here, I think a lot of the rhetoric behind these has been, at least this morning, I saw a lot of the pull forwards in terms of okay, well, if an EV tax credit goes away, are they pulling forward any of their sales? I wouldn't. That may lead into some kind of a pullback, but again, I think a lot of this is the rate stuff too. So if the velocity of rates coming down is to increase, that's going to be good for all of those EV makers as well, right? Yes, U.S. EV manufacturers have to get their costs down to let's say compete with Chinese EV makers, but in the US, they don't even sell those. So in reality, US EV manufacturers aren't really competing with the BYDs and the NIOs and the Li Autos. So to me, it's not really a thing. So to say that is that's on a global scale, but in reality, someone like a Rivian, that's not competitive. They're not competing with BYD because they don't even sell there. They're only selling here in the US, and those cars aren't sold in the US. So it's kind of not really comparable. Like a moot point. Anyways, moot, not mute. Wednesday, Google. So Tuesday, Amazon hardware reveal, new Alexa. Wednesday, back to back, Google has an event that expected to unveil their integration for the AI smart home devices. So again, new Google Assist for Nest cameras, speakers, doorbells, all of that stuff. So Amazon, Google, boom. And then also Wednesday, 75th anniversary of the founding of PRC. So this morning, BABA was up another insane amount. I saw that and I was like, oh my goodness, I got to pull up a chart here. BABA is coming. I've been long this stock for a minute. Yeah, it's just 180 again. And I was kind of worried that it wasn't going to hold 175 because that's a key level here. But yeah, she's going. And I've not, BABA to me has never been a story about valuations, at least from a Western valuation perspective. It's never been about that. Like if you're going to look at BABA as an equity or a stock, that story has to be about policy and the government's like posture. And look, that turned around a while ago. Actually, probably mostly since Trump came into office, believe it or not. And look at the turnaround that it's had. So again, it's not about the fundamentals from a Western view of fundamentals or it being cheap or expensive. I don't think it has anything to do with that. I think it's purely based on policy and the political posture and whether or not, look, it's a communist country, like whether or not like the government's going to support the stock price purely. And right now it is. So there's your stock. No, I don't think it has anything to do with fundamentals. I think you're like totally missing the picture if you're looking at that. But on the 75th anniversary, there's going to be a party. And if you're going to look for a trade, win Las Vegas, MGM, Melco, maybe possible trade ideas. That I thought was actually kind of an interesting one. Thursday, balance sheet, we got this. And then Friday, they don't even have it here, but Friday is September jobs reports. Yeah, everybody's looking at 50K. I think that's the biggest thing. Yep. I'm looking here. We kind of went over the calendar. Earnings to date, I think. Look, CCL, we can look at, I didn't look at CCL so far. God, Jeffries is still a company. Okay, Jeffries, it's still a company. Vail, Vail's like the ski resort. So maybe coming into the winter season. Oh, Paychecks. It's just Nike. Conagra Food, Calmain now. It's just Nike. Looks like just Nike. I'll just double check. Yeah. Fermi. It wasn't one of these. What was this one? So Fermi, this is IPO coming. Their mission is to power the AI needs of tomorrow. I don't know a lot about this. I don't know if you guys are into this one or if anybody got in on this. This might be interesting. Neptune Insurance. This is an interesting IPO, but I'll have to look in this. But these power companies, man, they've just been absolutely insane. Yeah, that looks like pretty much it. All right. So I'm just going to pull up the indices really quick, and then I'm going to change this to a little bit better view. So you guys can see this. Oops. Canvas. Can you guys see? All right, so I'm just going to go resply real quick. So these are some of the old drawings. These are drawings that I would do for our server if you're in the server. Interesting, though. Let's just see, test. You guys can type them in the free chat. All right. So these are old paths. Let me just take some of this stuff off. So we had pretty much all of this that hit in the pre-market. Right here is kind of like what we're going to call like overhead resistance that we're running into. I'm going to flip over to a 30-minute chart so it's a little bit cleaner. This price of interest is where we're running to. Right here is that overhead supply. That is from last Monday that we ran into, boom, right in the pre-market area. So this is going to take us right to, I'm just going to grab that whole box. And our break is 664.43, which is actually from Thursday the 18th. So, and the breakdown on Wednesday the 24th. So constructive open, but unfortunately, like instantly breaking down, although not going any further. So to me, this is actually a very choppy kind of sideways setup. I didn't do Miss Cleo. So you know what? Let me pause here for a second because we do have, let me pause here for a second and let's check in with our friend. One moment. Yes, Miss Cleo's here. Okay, so Miss Cleo's here. I'm just gonna do I almost missed this. So here's her weekly. Oh, look at that! I didn't even see this Monday. So this is our forecast from Miss Cleo. So this week is the full, and if you're in the server, it's in the weekly trade plan. I just dropped this. Yes, it will be recorded. So the full for the weekly card, Monday is the 10 of swords, and then Tuesday, 7 of swords. So we go backwards, some cups. Ace of wands, I think, is good, and then the Queen of Pentacles. I don't know. Let's see what she has to say. So Monday, the 4 of cups is the fool. 4 of cups the fool. 4 of cups last week's. The fool this week, I don't see much to take from that. Okay. So we'll go straight to interpreting the fool's intent. It usually brings a new direction, which is okay. So when drawn as the theme card, it can indicate a mean reversion week. As a daily card, it's typically positive and sets up a short for the following day. So we have a strong chance for a decent start to the week. Okay. Monday is the 10 of swords. Yikes. Oh, that's right. We start the week with the final death. It's not what I expected. This card has a negative bias and only trends in that direction. The best case for the bulls is usually hovering above flat. Whichever direction we get likely gets reversed in the next 2 days. Well, I saw that in the charts that we were just looking at. Tuesday, 7 of swords. Looking ahead, we have this 10-7-4 indicative of a move backwards. All right, well, we saw that playing in the chart just a second ago. This card suggests that a trap has been laid and perhaps a bit of a punishing price action to follow. This card is the highest probability. This card's highest probability is to follow the prior day's direction. This means that if there's a gap in the opposite direction, it probably closes during the session. If no trap, look for one tomorrow. That's not super encouraging, Miss Cleo. Okay. Wednesday, the 4 of cups. The 4 signals apathy, which means that the majority of traders are not getting the prices they expect today. This could prove the trap comes after Tuesday's close rather than in session. This could prove that the trap comes after Tuesday's close rather than in session. All right. It also says that you shouldn't chase on Tuesday, hoping to cash out for profit on Wednesday. All right. It also means you shouldn't chase here either. She's basically saying hands off this week. Thursday is Ace of Wands. Aces are strong and indicators of new directions. The wands can bring impulsivity. Look for a mean reversion and a probable trend you can chase. Just make sure you time it right, given the likely whipsaws you'll face. Okay, so Thursday, turnaround Thursday. Friday's the Queen of Pentacles, back-to-back Fridays with this card. Last Friday brought protected downside, but the penalty was chop, which we expected. I think the same will be true this week, though we may have gotten lucky going positive last Friday. That's our biases to the downside. The recap is that we have an interesting setup with a strong statement to start the week, leading into some traps and mean reversion. There are a few chances for trend, but it will require skill to navigate. Yeah. All right. Well, I'm actually mostly in line with this. So I started out this whole thing with like, well, it's probably not the week to do much of anything. And quite frankly, there are basically two white boxes on my screen here. I think down in this general area here is your value zone. I actually think that later on in the week, there's a possibility, later on in the month, there's a possibility that we can retest this general area, but we'll have to see in October after this week to see where the cards land. Not the tarot cards, but the stock market, non-farm payroll cards. I think that's more important right now. But what happened this morning is that we got a nice little opening pop after over the weekend, and it was just kind of like sold into. So from a trend count, look, we have this high, this recent high. This actually it locked in a lower high, and for all intents and purposes, this is the most concerning piece. And so if you look at this, like, all right, well, here, I'll just do it a different way. I think as bullish as you may want to be, it's probably better just to be more cautious. You can be cautiously optimistic, but what I just did was kind of like connect all these lows and say, hey, here's our last high. Did we lock in a lower high after we kind of technically broke a little bit of structure down here? So the story was that the bears were essentially hibernating up here. This is the max. This is where the bears were hibernating. The bears have sucked. This was like their entire zone. We'll see. Do we have enough bulls to really continue to press this higher? TBD. I think it's TBD. Quite frankly, as long as we continue to stay in this general area, and I'm going to call this 661, I think that, yeah, you really have to stay bullish, or 660, generally speaking. So this area right here, and I'll make this like a green kind of area. If this whole section is your balance zone of this last consolidation, that green box is kind of like your equilibrium. And so over 660, that's like a bullish equilibrium. And so as long as we're above that, technically the bears are losing and the bulls are technically in control. So for now, this is trend intact. Yes, it's at the lower end of the channel. And when I say channel, what I mean by that, actually here, I'll do it this way. What I mean by that is, like, you could take this and we can connect all those dots. Here's the lower end of the channel. It could come into the lower end of the channel and tag essentially this piece here all the way down here and still be in a bullish scenario. So really, yeah, like the bulls are actually still in control. And as long as we're holding all of that, absolutely. Just for right now, this is a little bit of a battle zone. And I think that consolidation, especially in ahead of, a key data point that we're getting coming on Friday, sideways price action is absolutely in the cards. So that said, from an upside, for an average weekly range perspective, this right here up to 677, that would be an average weekly range to the upside on SPY. So 677 would be the maximum that I would expect SPY to get to. And then to the downside, right around 650, that would be about the maximum downside that I would see. So if we do get down there, 650 is kind of like your big value range dip buy. And I mean, that's to me, that's more like, yeah, for sure, we're going to bounce if we see 650s. But anything inside of that, it's not really a big value move. In terms of QQQ, we are still kind of struggling. These are extensions. So target. These are drawn for our server or private groups. This is 590, 599. This is about 600 psychological level. If we can hold over 600, I think it's obvious. Well, I say obvious, but if we can hold over 600, yeah, we should be going higher. Higher would be to 610. And this is actually going in about $10 increments on QQQ. What I will say is that for now, we actually have a stronger, what we call gap and go on QQQ. And so what this leaves you to is that we're going to use something called a half gap. And so for now, the half gap is actually sitting at 597. You can't see it on my screen, but this is measured. So from the over Friday gap to what we're going to use as the New York session high, or not New York session, the London high, the halfway point of that is 598, right? That's really where we just based out of. And anybody who's using that as their half gap, those stop losses are at 597.75. So the way this works is that if you go below 597.75, for sure, you're actually going to fill this full gap, which is down to yesterday's high, 596. But as long as we're holding this general range, we actually assume that this gap is filled enough for now in terms of the market inefficiency, and it does not have to fill anymore. So for now, as in today, this is as good as it needs to be. And as long as we're trending over that 598 area, we want to stay bullish from a technical perspective. And definitely if we're over 601s. But the second that price gets below 597.75, you will start to see a reversal for a second. Small, like a blip, is going to be fast, and that's going to bring you $1.50 down to 590, which basically fills this market inefficiency. At that point, you kind of like just let it go and see what happens from there. Then we see, does this hold as support, or does it continue on and go lower? But this is a key balance zone right now. We call this a half gap and consider this as good as filled as it needs to be in the meantime. It does not have to fill the balance to continue on higher. We call it like gap and go, but it's predicated that it holds that 598.5 kind of level. So that's QQQ. I think we kind of talked about it. So 606 is, and then 610s to the upside. Downside for the week would actually be about 585. And then like the bigger discounts are about 580s, which would be a retest of this area here on the week. But again, this is all going to be kind of like hang out, wait to see what happens for Friday. I don't have any major plans for even on Friday. On Friday, it's not even about Friday. It's about how Monday comes about, like how it's about how Monday digests Friday. It's not even just Friday. So patience is the thing. This is the dollar, and I think this is interesting. So we had a pretty hefty bounce in the dollar over the last couple weeks, and a nice little pullback today. My concern, though, is that the pullback is at a pretty bullish pullback. And so what I don't want to see now, and then I'm starting to see, I don't want to see continuation upside on the dollar going this way. So I'd like to see the dollar at least go flat, chill. But if we see the dollar, and here now is important, because this is a bullish retracement on the dollar. If the dollar goes back up, this is more into the safety zone, safety trade. This is people kind of like getting a little bit more defensive. This is a moment where you actually do want to be a little bit cautious because of this setup right into what we call near-term support, where the dollar actually could pop a little bit, which would not be super bullish. That pullback lends itself to a heavy press to the upside in gold, a heavy press to the upside in TLT, in our foreign kind of BABA. You got a lot of stuff like that moving, and some equities, but oddly, again, watching SPY come back down, Q's holding okay, Diamonds pulling back stronger, IWM pulling back stronger. It's a little suspicious scenario. All right, so I'm going to take a look at the server. Don't have a ton of requests, so that's cool. Hopefully we can get through this a little bit quicker. I'm going to take one at Hood first, and I think that, look, Vlad posts today, like, the biggest thing. So Vlad posts today, all right, prediction markets cross 4 billion. I had posted something not too long ago about $250 million target for this quarter, like the end of this year, actually, which was by far like the farthest out there. This puts me like right on par. So that actually is right there. I'll take a look at Hood. Right. Yeah. Are we there? I uncover. I had some covered calls, not covered call. I had some covered like leaps. I took that down this morning when I saw that post. And I'm like, this is crazy. And I'll just let it run. So for any of my guys in there, yeah, I did that. After seeing that, I'm a little, maybe a little over the top, but it is what it is. And definitely after this breach of that 130 level this morning. But here we are. 150 was, it's like 149. But this looks like 136s are in play for the week. 137. Oh my goodness. Guys, this is just insane. I had 150 coming in hot anyways. And truth be told, I was just looking at this thing this morning, like between BMNR and Hoodie, I'm just like, the longer term for it is like just really happy. So yeah, 142, right in this range. As long as we can hold 133. So 133 was the first stop from this monthly extension. 133.75. We're a little bit over that. If it can hold that, I think this is getting a little, maybe a little extended, chopping a little bit. But I just think that was such a fundamental like note I'm just like, well, okay. Maybe we're a little over our skis. I mean, we're holding. The weekly range is 137. Look at that thing. Just a thing of beauty. But yeah, I really want to see this hold at 133 level moving forward, which is basically this morning's pivot. Okay. So NVIDIA and AMD is next on the request. So NVIDIA is very much stuck in range. So not really sure what to. I mean, that's the range. There's nothing to do here. Aside from saying if it does break out of the range, then you're looking at 194.5, give or take. And then inside the range, there are basically two kind of areas here. 178s are your kind of what I might call like your explosion line, like right here. That's where your shorts really cover. And then your somewhat like key levels, midpoints, or that 177 area there. Other than that, like your real dip buys are absolutely better suited in the low 170s, high 160s. So this is where you want to be buying it. This is where you could know that, hey, look, something's going to happen like from a high velocity perspective, and it's going to get right into that 183. But that's it until it actually breaks out. But you're not 1, 2, 3, not really there, maybe. This kind of looks like you have another one. And then, yeah, if this next pullback sits in that 177, it would be right in this general area, 178s. And then maybe you can think about the 195s. And that would be a month or two. AMD. Similar. You got to get over like that 160. Oh, they keep moving the goalposts on this guy. AMD needs to get over. Yeah, it's holding, but I'm not seeing a lot of. These you have to be patient. So November, late November. So this hold is important over 160. $162.5 is kind of like that breakout point, but you're not over it. And if you do get that, then it's still going to be kind of like choppy, because when I say breakout, what that means is that you have a quick press to like 167, but it's just a small like a inefficiency in the market that's going to basically create this gap as your next kind of like chop zone. And then that becomes your that becomes your next consolidation box, like between 167 and 162. So this has got, aside from some other technical aside from some other fundamental factor, that's what that kind of looks like. Yeah, all this is pointing me to the same thing. Possibly in there. Yeah. So here and then possibly there. But how long is this consolidation? You need a fundamental move. You need a fundamental event here. This is a little bit stuck. I mean, it's been a nice ride. So huge move. Give it an extended rest. I think that's in order for sure. Oracle, will we fill the gap? If you guys want to do, so will we fill the gap from Peter, Oracle? That's at least some context that helps me a lot. So here is so earnings. What I'm going to look at is kind of like, where did it close? Here's your power earnings gap. Then I'm going to say, all right, here's your base. No, you will not fill the gap just yet. It's too early. So here's your 50% mark. Actually, you might want to be long here. So right off the 20-day, literally right here, right off the 20-day. So here is actually where their stop is, but where the bulls are going to. So this is what they're going to call your golden pocket retrace. And then here is like your golden zone retracement. But between the 0.5 retrace, when you lose a 0.5 retracement, the odds of going to a 0.618 retracement, extremely high. That's what we teach this a lot in our school gains. When you lose 0.5, the odds of going to 0.618, extremely high. So that's what this is right here. So 0.5, and I'll just make this to 0.618, extremely high. 293 to 281. That's pretty much exactly what happened within a single session. And when you get that, then you usually get what's called this golden pocket, which is to 0.65. And that 0.65 is 277. And the reason that's because anybody who has this zone marked out, that's usually their stop, right? And so at 277.67, give or take, that's their stop loss. So this is the point where you would say, okay, that's where I'm going to get the gap fill. But not until then. Until I get below 277 and change, actually, this is where buyers are, in fact, most interested. So in fact, this morning is more of a dip buy with a little confluence off the 20 than a short, believe it or not. And that actually, that dip buy would look twofold here. So we're going to do it the opposite. You're going to look for this as what a retracement could look like. You're not going to go all the way up, but you're going to look for this area with two kind of critical levels, and that's going to be target 312, secondary target 320, with confirmations. Obviously, your stop is here, 377.50, and you could have a small target 293. So 293, 312, 320, three targets. There's a trade plan right there. That's what that looks like. Very tight risk, high reward. So that's 1 to 8, risk 1 to make 8, risk reward. Not bad trade plan. Okay, CoreWeave. CoreWeave, yikes-a-roni. She does not look ready yet. I think CoreWeave is I think that you could put this on watch. you have to, it has to get over. So a better discount's like sub 120 in this area. So maybe like another discount area. But again, these are ones for sure that unless I have like a big discount or bigger discount like this in this 105, I have a lot more confluence in this 105 area. And then I know that's where the pattern traders are gonna come out. Not so much here. But so I would, it's a big move. I would definitely have to like see a lot more. I'd have to see a lot more convincing moves depending on my time frame. So I don't know the time frame that you're looking here. I think if you caught the lows, sub 90s, you probably caught the lows, probably. Otherwise, I'd be looking at, sure, here's my last double bottom. I'd be looking at the low right before the last low. So that's either here or here, which gives me more confidence around that 105 area for CoreWeave to go long. Or unless you're talking about a short, then I think that short, again, I might be a little bit late to this short because that was definitely a double top here. And you're coming back into what might be an intermediate balance zone. So it's kind of a no touch on CoreWeave. JR, obviously, again with the multi blaster. OKTA, balance zone here. This is choppy. I think you could get some small bursts, like $3 bursts into that 3 to 97. You're already getting one right now, but you're clearly hitting some overhead resistance, which you will hit, boom, 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 until you finally get through. So expect more chop like that. This is that's a choppy ride. It's a nice base, but depending on how you trade it, it's going to be very volatile. TTD. Back to A, scene of the crime. So, I mean, 44, 45, 47, back to this breakdown zone. I still need to see a lot more out of this guy, but I mean, is it worth the flyer? Sure. Stick it in a drawer, forget you own it. This is at A breakdown level. You got A double bottom again. Oops. 1, 2. I got to pull this all the way back to weekly. I mean, this is where it's stopping, like over and over. I don't know. I think you have to do a lot more DD. I think you can see 56s before people get interested, but this is that chop zone. So 56 is probably a foregone conclusion, but 44 to 56 as a chop zone. CRM, again, nothing to do here. This just goes sideways for a bit. It's very much consolidating. Has been, will be, continues to. This one should consolidate for the rest of the month, which is probably fine in this little box. Literally. I wouldn't expect anything out of this. And then, again, mid to late October, she'll wake up. Boeing, I don't know if there was news or what, but right back into that balance zone here, smacked at the 20-day SMA, smacked at a little bit of overhead resistance right here. Boom. What was their news? I don't know what the news was. FA, Union. Get out of there. Union's no good. Dude, unions are like the worst for capitalists. Yeah. That's not really going to be fun. So it was good when we know Boeing's investing in the people to do their own kind of I think this was a good spot. So BMNR right here, we're looking at this area here as close to 50 as possible as potential support. From here, this prior area, and sure enough, we got a little double tap last week, and man, did it surge over the weekend. Tommy Lee buying some more ETH also. So is it out of the weeds though? TBD. TBD. Now the next spot is here. So this general area, and I think what you want to do is kind of like grab this $50 zone. We got a couple little wicks right here. This can take some time. I'm not in a massive rush. So if this continues to kind of consolidate, I would be happy with that. If not, or even if it just goes sideways, I'd also be happy with it. I like the consolidations, volatility, especially if you're an options trader, really needed to come in. So this is setting up for something cool for an options trader. Let me just look at this sideways. Today is like not like it's a big mover, but the technical setup now makes this look even a little bit better. But the daily candle is so far not strong. Depends on where this closes, and even more so where this opens up tomorrow. It's very neutral. It's very neutral, but I have a feeling like the whole market's going to be somewhat neutral as well. I think there's like, as long as we're over like this general balance zone, and I think this comes from Monday the 15th, that general balance zone, as long as the holding, and even like a quick downside wick can come into the 20-day, which is right around 50, that's also okay to hold. I just don't want to see that 48 low get broken. That's all that really matters. As long as that 48 low doesn't get breached again or really like significantly tested again, then it's all good. Uber. It's a tough one. I don't like this here. I think it's not ready. Probably pulls back 94s. 94s. I would definitely not. Microsoft, better, but again, sideways price action. This is going to work out longer term, but just not. I mean, this needs it, but it's not. It doesn't have a catalyst. So this again, I want to stay catalyst focused, and I would be grasping at straws if I'm at least right now. I would have to guess, and I would be like this would be like a lottery ticket, because right now, as far as I know, there's not like a Microsoft Catalyst. I mean, yeah, as far as I know, there's not a Microsoft Catalyst. So like, if one comes, yeah, I would just be getting lucky. So unless you guys know of a Microsoft Catalyst on the like horizon that I'm not aware of, that's possible, because I don't think it's built in. We got Amazon, we got Google. I want to be Catalyst driven, because without it, I'm just seeing a lot of sideways action. But yeah, this would have to be over. I mean, it's holding ground, but I could easily see this flipping. It's not holding strong. 512.5 was that stronger area, which it is over, but it's not over with a lot of strength. AVGO. That does not look fun. What happened here? So this one is at risk. So similar to like what we were doing on Oracle. And I mean, they're somewhat related, kind of. So I would put a hard stop right here in that last week low, 327. So it's there. And I'll drop this in. It's right there. And so just because this is here from that last week session, and I'm not really, okay. Oh, I didn't have my, okay. So now I got it. Pinpoint accuracy. So it's 324.50. Pinpoint accuracy. So here's their golden pocket. So 324.50 is their stop. This is that golden pocket. Oh, no, not yet. That's why that's so important. But yeah, losing the 50% retracement, you're going to that 327. But yeah, be careful, because you're not really filling the whole thing. Not yet. Oh, look at PayPal. I think there was some kind of news on PayPal. Big move here. I want to see if this was so wiki. Somewhat of a bullish pullback. This has to hold 69.5. And maybe if you're lucky, it gets to 72.5 off that. So if it holds 69.5, if you're really lucky, it gets to 72.5. Which is actually be a pretty big move, but also right back into resistance. New Bank, I'm not going to look at Riot. New Bank looks rough. New Bank looks like it's had a huge run and is topping out right now, right into the bear zone. New Bank looks like a little profit taking going on. New Bank looks like some selling cover calls for sure. Oscar. I will look at Oscar. And I'll go, oh, Oscar looks great. Oscar looks great. Let's go. Oscar looks really good. So 1944. If I can get through 1944, that's where the bears cover their shorts. See where it's gotten like that little overhead blip. It's coming into it right now. I don't know if there's news that's hitting the wire as we speak. This thing is moving hot as we speak. But yeah, so this little area, 1, 2, 3, yeah. So this little like 1940, 1950 area, if it can get through there, yeah, that's the squeeze zone. Where you can tell, I just had to drop down to a smaller chart where the shorts are like, that's where they're shorting the stock or where they're selling. So once this wall of sellers is like bought, like once they buy up all the shares that are some kind of resting order to sell a bunch of shares right in this area. So once that's chewed up, then this is essentially free to go into the 22s. And that's what's going to happen. Micron, cool whip. The Micron has this thing where like it does this and then you wait and you wait and eventually it comes back. Similar thing. It's going to be 177, 167s. Super similar. So you could get a little press. That's 165 to 167, but it's a chop zone. I'd be kind of cautious here as you're a little extended. I would honestly be a little cautious there. A little extended. I've been a little cautious on semis without catalysts. Speaking of your MBIS, this one I don't think is going to be pulling back just because, one, it's not a U.S. equity. Two, I think that I honestly think that like any dips are getting bought on this because we know it's just one deal, like one deal. There's more deals coming. We know that, right? So to me, this is going to be, all right, 120 next. This is one where I'm just like, all right. This one I don't see coming back. Yeah, I got a lot of confluence into the 120s, which is this a bullish retracement? In fact, it is. So I think this is probably fine. Like, it's not like a great discount, but it's somewhat of a bullish retracement, even back into that 102s. But I think this is one you could put on the shopping list. Like, hey, if we get a pullback, this is probably buyable on probably most. Yeah, I know it's gone a lot, but it is one of those where it's like one deal. We're probably getting more deals. And so what's the market cap on this thing? 27 billion. Look, AUDR. ADUR. Last one. And small cap is killing me. Micro cap. So I got to go on a weekly. You have to DYOR on what this company does, but the last consolidation here, we're going to have to go extension. You kind of got there. You're kind of there, big dog. Let me drop in a little bit. So that's the weekly. Let's assume that you can hang in. Let's take that bad boy down. and say that goes. All right, so that puts me at a 15. Let me just get a quick assumption. Almost, not quite. So that puts me at 15, but you are extended. So where, if this does not extend, then the pullbacks are, if this does hold and it's small, it's micro, 1150s to 1050s as a pullback. Speaking of small caps. Holding, grab. Not bad. That's actually a bullish. That's a pretty bullish. That's a pretty bullish wick this morning. Not bad. All right. Yeah, it was 15s if it does break out, but if not, 1150s or so. Cool. That's it for me. Appreciate you guys hanging in on the technical difficulties for the day. But on to the next one. Hopefully this works out.